Asian financial cooperation, the power and the path. That's the subject of a workshop presented by Deloitte at the Asian Financial Forum 2013 in Hong Kong, looking at political, economic and various other forces at work. And addressing those questions is Dr Kenneth DeWoskin, Director of Deloitte China Research and Insight Center. And when you're looking at, I think, regional cooperation, which is what you're doing, what is the thrust of your argument?
I think there's a very strong consensus that there are tremendous benefits to be derived from regional economic cooperation. The question always is, how do you achieve it? How do you achieve the benefits and the potential without falling victim to some of the risks? I think we're in a period of time when everyone around the world is aware of what's going on in Europe, for example, and that illustrates for us what some of the difficulties, challenges, and risks are involved when you try to integrate a region, integrate a currency. And so Asia looks to Europe, looks to the United States, looks to the entire sort of post-global crisis scenario globally to try to understand what needs to be done to achieve the positive benefits of regional cooperation without incurring a lot of the negative risks.
So what are these major risks, and what is the biggest risk as you see that?
Well, I think that right now the biggest challenge is whether globalization can proceed supported by a process of coordination and harmonization of a lot of different national economic systems and national regulatory systems, including financial reporting. Because right now the discrepancies that exist from one country to another, the differences and the uniqueness of these various systems is creating some noise and friction in the system and actually some pressures to de-globalize rather than globalize, to disintegrate rather than integrate economies where regulators can't agree on how to manage certain aspects of cross-border activity, for example, capital market flows. So these challenges need to be met. They need to be met with innovation, creativity, and trust, actually, in order to move forward successfully.
So where does Hong Kong sit as part of the regional capital market?
Well, Hong Kong, has a history of at least, 60 years, 65, 70 years, playing a role as what I would call a translation center, not in the narrow sense of language, but in the broader sense of integrating business systems, business practices, cultural activities, language, currency transactions, everything that is necessary to harmonize and coordinate the needs of various economic systems, various national economies, in a way that's very, very productive for all the players. Going forward, I think that's going to be a critical asset, not just for Hong Kong, not just for the mainland China, not just for the Asia region, but for the world as a whole.
So are there really big implications for this de-globalization?
Well, the most efficient allocation of capital is a system and a situation which provides capital to flow any place in the world where it can be most productive. That's the way a market works. Any impediment to flowing any place freely and successfully and securely reduces the efficiency of capital from a global standpoint. So I think that we want to see progress. We want to see world cities like Hong Kong continue to move forward in their role of mediating and moderating activity from all over the globe in ways that capital can flow freely and productively.
So the Deloitte workshop, I think, also brings up the question of a common currency. How do you see that?
Well, common currency issue arises because of national policy in dealing, say, with the dollar, or the challenges of the euro, or the challenges of the Japanese yen, currencies of that sort which play a major role in cross-border investment and trade settlement. I think those challenges will remain very difficult. It's not easy to see how any single nation will create a sufficiently high level of trust, other than the United States, that its currency would be seen as a reliable sort of safe harbor currency over a long period of time. Of course, the US dollar's role is continuously challenged as well. It doesn't seem to me very probable that an artificial currency, such as a special drawing right set up, say, by the International Monetary Fund, would be very successful. I think what we're going to see in the immediate future is new efficiency created for trade settlement. And that's, for example, what the Japanese-Chinese agreement about settling their $340 billion a year trade in either Japanese yen or Chinese yuan is about. It's about creating better efficiency both for the trading companies, for the economies as a whole, and for the consumers in those economies by eliminating unnecessary trade transactions. But it is at this point difficult to see a common currency extending globally in a way that satisfies all the parties that would have to be satisfied to make that work.
And I guess one good reason for not looking towards a common currency in Europe is, of course, the problems of the Eurozone.
Well, that's exactly right. And I think that while there's been a lot of analysis of the global financial crisis, there's been less analysis of what's going on in Europe because it's still unfolding. It remains, it's up and down. If you read the analyses of, say, New York City stock market trends every day. It's the impact of Europe, but one day it's positive and one day it's negative.